I've said it before, I'll say it again. When a high-quality company with a terrific long-term track record stumbles, you need to use that rare moment of weakness as a buying opportunity because you'll likely be rewarded in the not-too-distant future. Take Domino's Pizza, the world's largest, best-run pizza chain, over 12,500 locations worldwide. When Domino's reported in April, the company's same-store sales slowed pretty dramatically. Stock sold off big time, trading down 120 in the immediate aftermath. But then the same day, company CEO Patrick Doyle came on this show, told us that things were fine, reassured us. Sure enough, that turned out to be a tremendous buying opportunity because Domino's returned to form this morning, and the company blew away the numbers. They reported 4-cent earnings beat off a 94-cent basis with higher-than-expected revenues, and most important, they delivered a terrific 9.7% increase, 9.7 in domestic same-store sales. International, same 7.1. That marks a major improvement from last quarter's domestic lackluster numbers, and it sent the stock surging up a lucky $7.77, or more than 5%. Oh, and when the share price was languishing down on the low 120s, Domino's came in and bought back $224 million worth of stock. So you know that whenever this one was a pullback, the company will be in there purchasing with you. At this point, the stock has given us a quick 20% gain, almost about 20%, since the last time we spoke to Patty Doyle. As of today, it's sitting at a brand new all-time high. Can it keep climbing? Let's check in with Patrick Doyle, the bankable president and CEO of Domino's Pizza. Hear more about the quarter and his company's prospects. Mr. Doyle, welcome back to Mad Money.
Thanks, Jim.
All right, Patrick, I want to use this as a bit of a learning lesson. You came on the show. Stock was down badly. You said business is good and not to worry. Your track record's been amazing. You put your money where your mouth is, didn't you? I mean, 1.8 million shares you bought back at an average of 121? You were in there the whole time.
Yeah, that's right. We were certainly very active. Look, we actually felt good about the first quarter. I mean, we're still up 6.5 in the first quarter. And you know, we felt good and felt like it was going to be the best way to put cash to use to generate better returns for our shareholders. So, you know, we clearly voted with the cash that we had to spend, and happily the second quarter came in very, very strong. So we're really happy with the momentum in our business.
Okay, well, I understand that you felt the last quarter was good, but there was an acceleration this quarter. So let me think. Store reimaging, digital loyalty, zero-click app. Give us whether any of those were marginally important for this really great same-store sales number.
So, you know, our loyalty program is going very well. It had a meaningful impact on sales. We already saw that in the first quarter, but it's another quarter in. Our metrics and the data around it, you know, showed us even more that clearly it is helping to drive orders. It's driving frequency for our customers. So certainly that's been a big part of it. But, you know, overall, it's just the momentum in the business. And, you know, I've got to call out our franchisees. I mean, our franchisees are investing. They're getting the stores reimaged. They're staffing the stores to deal with this volume increase. The volume was essentially all volume. You know, it was not a lot of ticket. It was really about order counts and traffic in the stores. So our franchisees and stores got ahead of it and handled it well. So, you know, just an awful lot feeding the momentum.
But now let me ask you, I thought that there was a cautionary line in the conference where you said, yes, the unemployment rate in the U.S. is down to 4.7%. It's gotten tougher to hire people into the stores. Tougher meaning you got to start paying them more? They have to start paying them more?
Yeah, you know, we probably will. And you know what? That's great. I mean, we've always talked about the fact that, you know, the number one economic indicator for us on growth in our category is the number of people who are employed. And so as more people are employed, that's going to drive demand. And if that means it's a little bit harder to staff our stores, that is a very high-class problem. We'll take that all day long.
Okay, now, I want to talk about the new technology because you always introduce technology every time you're on. Zero-click app, what does that mean?
Yeah, so you link this app to your pizza profile. We've already got everybody's information online, so they go in, they link it, they open the app, and their easy order will be placed 10 seconds later unless they stop the process.
So in other words, I like my tomato pie. They'll know my profile, is what you're saying.
That's exactly right.
Well, that's terrific. Now, one of the things I thought was very interesting, I did not know until this conference call that Germany is green field for you. There's just a lot of growth there. Talk about that, because that's a huge country.
Yeah, it sure is. We had a couple dozen stores in Germany. We're actually converting a brand there that's got a couple hundred stores That's going to happen over this year and into next year, and we should have the #1 position in Germany by the time that's done.
And you're talking about faster organic growth globally. Explain to people what that means to have organic growth rather than just putting up a lot of new stores.
Well, no, organic in terms of stores getting opened by existing franchisees versus these conversions.
The kind of
because we're converting the brand in Germany.
Franchises in countries.
Yeah, and we're converting the brand in Germany. We're converting a smaller one in France and one in South Africa. So I'm talking about growth coming from our existing franchisees, existing master franchisees. That's driving most of the acceleration in store growth. We're actually, for the first time in our history, on a trailing 12-month, we've opened 1,000+ net stores. First time we've crossed that threshold.
Okay, you also in this conference call indicated that you have more ad dollars to spend. Now, where is that going? Online, offline? You talk about even the election in the conference call. It's a pretty interesting call about competition for ad dollars. Where are you putting your money versus, say, 2 years ago?
Digital has continued to grow as a percentage of our spend, but television is still the #1 area where we're spending dollars. And so that's certainly where it's gone. But the mix has continued to shift more and more to digital spending over time.
Now, I've been waiting, and maybe it's football season. You've been on a bunch of times, and you had a blockbuster. We haven't had a blockbuster in the last couple of quarters, meaning something you introduced that I didn't know I wanted. Is there something you're about to introduce that I don't know I want that I'm going to be eating during kickoff?
Not that we can tell you about yet, but boy, I'll tell you, the pipeline is terrific. Our digital folks are doing great things. We got plenty of new food in the pipeline when we're ready for that. So lots of things we're still working on.
Okay, last line of inquiry. You were the first to identify and tell me that India is the next frontier. Now, we are starting to see India pick up for other. Tim Cook spent a lot of time in India. Where is that market for you, and how important will that market be in the next 3 or 5 years?
It's very important. It's our largest market in terms of store count outside of the U.S. We're now over 1,000 stores in India. We have more stores in India than any other global brand. And, with over 1 billion customers, it is important, and it's going to continue to be very important for our growth story going forward.
All right. Well, I hope people listen to Patrick when he comes on, because he said at 120 that it was good, and I don't know. You said it was good, and then you bought it. Maybe that's the largest sign of confidence we need. Patrick Doyle, President and CEO of Domino's Pizza. Congratulations on a great quarter, sir. Good to see you.
Thanks, Jim.
All right. This is a good one. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.